Yeah. Welcome to Momentum Monday. Today is November 19, 2023. Howard, what's going on in the markets? Markets.
You start. I mean, you can see that chart right there. A lot of good
Yeah, I
market
mean, consolidating
action
near
wars, and the market loves it.
52-week highs, not too far from all-time highs.
Mhm.
And we had a CPI number that came below estimates, PPI inflation number also below estimates. And we had a big gap, and so far that gap is being digested sideways. And what matters more is that market breadth is improving because small caps are in their own way trying to join the rally. Obviously, still below the 200-day moving average, but from a technical standpoint, it's important that they're starting to make higher lows and higher highs. So I'm thinking that if the Russell 2000, can start trading above its 200-day, let's say, 185 or so,
Mhm.
maybe we'll see even more extreme short-term moves than what we've seen so far. Because, for the majority of the year, the big movers have been like about 20 stocks, really. Most of them are large cap tech stocks, the Magnificent Seven, the Nvidia, and uh, Microsoft, and Apple, and Google, and Facebook. They've been among the big movers, really, and then a
Yeah.
few others. Mostly big stocks.
Yeah,
Small
Adobe and
caps.
Intuit are interesting because they are going to benefit. Same with Salesforce from, you can't, they're going to benefit the most from AI, right? They're it's the category dominance that are sneaking back. Adobe and Intuit looked like hell. So did Salesforce.
Yeah.
And their moats are, it's same with Microsoft. If AI is going to help people that already dominate, it's going to be harder to switch off those products when they implement AI. Um, so that's why you see it's kind of the verticals that are really rallying the dominant software companies. So that to me is interesting. The other thing that I've been writing about, the enemy of my enemy is my enemy. It used to be the enemy of my enemy is my friend in war, but now that these tech companies, we're seeing it this weekend with OpenAI, right? Everybody's conflicted. Everybody's money is everywhere. So there are no friends. Elon was an OpenAI, and now he has Grok. Microsoft is just dusted across. Microsoft's basically an AI fund on top of a cash flow machine. And I think that's why they're leading. But, I'm still betting my largest position is still Google because, and I think they're going to be helped a lot by this open AI infight because it opens a lot of the infighting and kind of laying bare to like the weaknesses of management and the board at OpenAI. Um, so it's really interesting. It's hard not to be interested in tech right here, other than just the people that are involved in tech. It's just kind of gross. But we all knew that. The in XLKQQQ, instead of trying to pick winners, I mean, the big just get bigger, right? It's so AI is so distributed to all the winners, right? To the incumbents that trying to pick which mega cap is going to benefit is hard. And then AI is just the government spending and all these companies with cash are spending. So the semiconductors pull them up. They've never been less cyclical. AI, uh, space, the Internet of Things, and the smartphone. So those are always on 24/7, 365. Now you have defense spending that's going to explode because of the wars. So this is just it's a boom. Again, forgetting valuations from them because I don't know how to value these things. They're so big, but forgetting valuations, price. So you can only look at price action and sentiment, and at least two of the three, price action and sentiment, are really bullish for stocks. And then you had seasonality, December and January. So, if I was 30, it would be so exciting. I'd just be super long. I'm older, so the valuation factor creeps in, and I don't need to chase. But like, this is a pretty good setup, Ivan. I mean, I went from like being cautious to like, you're probably only looking at longs right here.
Yeah, I mean, things changed fairly rapidly after the Fed acknowledged that inflation is not their biggest concern right now, that they want to balance the risk. They see a balanced risk between inflation and recession.
And it still comes down to the inflation and interest rates in the dollar. So
that changed everything. Level. Yeah.
So those are now lining up as a third thing, right? Is just kind of the government. And the inflation does matter. What there's, it is, oil's coming down, natural gas is a mess, prices. Like, winter is not coming, in a sense. UNG, natural gas, just breaking down again. Doesn't look like people are worried about. Wasn't everybody worried about natural gas because of Ukraine and Russia? Meanwhile, so tanker. Anyways, the bull market. I was going to share. Let me walk through some charts out of them. I may help you.
Okay, go ahead.
Let me pull up a few. So the first one is another one, uranium, right? With my friends in this uranium trade, JC at All Star Charts, where some of them there were sharing this. So you have this huge base in uranium, but then you have kind of the global conflict and the energy. We're getting a reprieve to think about nuclear for the billionth time. So I would say this is one interesting trend that continues, right? Again, I don't know how to value these companies, but price action is good. The new all-time highs for tech, which we talked about, you can see my screen. You've got the biggest QQQ inflows on record. So people are chasing, but there's so much money on the sidelines. So that's a bullish potential sign, even though there's record inflows on QQQ. XLK, which has performed better over 20 years, probably because it's 50% weighted Apple, Microsoft, is already at new all-time highs. So nothing new there to show everybody. Semiconductors, as we talked about, I don't know how you can deny this. And again, picking stocks outside of NVIDIA and AVGO is tough, but like, during this OpenAI crisis this weekend, it was, quite obvious that Sam Altman, he may not be the right guy to lead this company according to the board, but like, was out raising money for a semiconductor competitor to NVIDIA. So everybody's enemy is manemy, even though Sam's, working on OpenAI, he's got to think through, where do I get my compute power from, right? And then, with the wars going on, what about decentralized compute, which is probably why crypto and Ethereum and Solana are running, because, if you can't trust anybody, you need some decentralized hedges. So semiconductors are huge. Just the index, forgetting just NVIDIA, I mean, that is, if you told me rates were going to go from 0 to 5%, China would be in complete meltdown still. There'd be two wars. This was in the last year, China breaking down, and that the semiconductors would be at all-time highs. That would be the bet I wouldn't take. And that's, why you just got to follow price and not have an opinion. And then this goes to what you were saying. If money's flowing into the QQQ, and we get a pullback there, I don't think the money comes out of the market. I think this kind of will go into those small. People may just rotate into small cap, and so. No breakout yet in Russell versus the S&P, but it's right there. So that was another interesting chart. Let me see why What else I got? Oh, I thought this was interesting, man. When bubbles burst, uh, so I didn't know this, but like Baba is now below its 2014 IPO price. And in 2014, when it came public, it was 12.3 billion in sales. And 9 years later, it's a 10x in sales and below its IPO price. So, the markets can be cruel. So is that severely undervalued? I don't know, but it just reminds you when you see charts like what Alibaba had and that sentiment, it can stay ugly for longer.
It's been a valuation trap for so long.
Go ahead.
Yeah, Alibaba has been a valuation trap for so long. Even someone like a super smart person like Charlie Munger, even he's been burned because he believed in it for so long, and even he finally, I think, threw the towel and just gave up. He understood it,
Oh, he was in Baba too, right?
Yeah. I mean, obviously just reflects the market confidence in the company, and we know that they're not independent, they're super reliant on the Chinese government.
And this is interesting this weekend. I've been just to put my outside America hat on, which I don't really invest in. But tonight, Argentina has a new president who's very kind of down the middle, a very anti-left, woke, whatever the term is for very far left, right? Even though he himself is a progressive, supposedly, from what I've watched in videos. Anyways, Argentina's perennially been a disaster with inflation, et cetera, et cetera.
Hyperinflation, yeah.
And which kills any economy because trust. But it's held up well now since and with a new president that kind of stands for low, less government, and it's commodity-rich country, and it's a chart looked pretty interesting. So there's just a lot. I'll let it go back to you.
Okay.
Let me switch back. I stopped sharing.
Yeah, so I switched back. I mean,
the other thing I would say is tech profitable companies. I mentioned Udemy, Uber, basically all-time highs. But it's had a couple quarters in a row of profits. Duolingo, I think, is profitable, and that's kind of one of from the. I think it's profit. Yeah, so you can see as it switched to profitability, the only stocks that are moving that are tech stocks are like definitely there on profitability. And like I said, like with Udemy, which is these perennial money losers that get surprised and finally turn on. I think I mentioned this a few weeks ago in the 12s. They surprise. You can see those blue charts again. So still lots of upside for companies like this if they can truly surprise the profit size. Not cheap. None of these companies aren't cheap, but they have to show profit. And the other one that's interesting to me is Shopify, which definitely has got a reminder that they're going to have to be profitable this time around. And there's a lot of leverage, and they're not cheap. So this is what people are going to have to remember. They're not going to do what they used to do, but at least the management now has a chance to understand they got to be profitable. There's a lot of operating cash flow leverage there. And the other thing I like about Shopify is e-commerce is now kind of underinvested from VCs. And we all know that the secular trend of e-commerce is going up. So money's going to flow back into e-commerce as better models, right, happen, where people aren't just focused on selling something from Alibaba on their website this time. And those people have been flushed out. So Mercado Libre, obviously, again, that's just more risk because you're dealing with foreign companies. I still think you got to stick with U.S. First. But yeah, Mercado Libre, perennial leader. And then you can see like the squares, even the FinTechs that we talked about that I hate at the bottom.
Yeah. I mean, related to crypto, Square is related. It's perking up a little bit.
But I'm saying you can see the blue bars it's it's terrible management. They're all over the place, but they're profitable, and stocks will bounce. Your profitable stocks will bounce, and so the worst stuff is starting to bottom, right? So there's
The
the
market.
market. The market's acting like at least the next few months if things are okay. Doesn't mean prices will go up from here, but it's hard to. The market's not. The market's got a lot of negative sentiment and a lot of reason for people to already be. The first 10 pages are full with like trauma, and so no one's talking about what can go right, and that's when stocks go up.
Yeah, I mean, nothing goes straight up. Obviously, the bull markets, they often see sector rotation. So I think the most positive thing we can see is if we see a rotation from all the few mega caps into mid caps, into small caps, which tend to move faster anyway. So that would be really a sign that this bull market really has more room to run if we see this type of rotation, if we basically see more speculative names starting to outperform the big mega
caps. No one's talking about the market. Congress is talking about which country they should defund, or what war we should be backing. No one's focused on. For a decade, it was like, ooh, what's the Fed going to do? Zero. You know what I mean? Like still dealing with the '08 crisis.
Yeah.
And now the markets can quietly do their thing because no one's focused on them, right? Like rates. There's a lot of macro problems, but the indexes are controlled by companies that are just so big and unbeatable. Like, how do you can't bomb Apple, right? Like you can bomb an oil company's pipeline, you can disrupt commodity flows, you can hurt retailers. But how do you hurt Apple? Like,
I mean, they're always way, obviously.
You can't unplug something and hurt their sales. People need their iPhone. Same with Google, same with Facebook, and WhatsApp has proved that. Same with Amazon, same with Shopee. Like, it's hard to unplug. It's hard to take down these companies. They have so many knobs and dials, and they're so hard to get, right? Like, there's not one weakness. So,
and even those type of companies, Howard, they have to be accountable. And we saw it last year, though, when interest rates went up so much, so fast. All of those mega cap companies, they went down anywhere between 30-40%. Tesla was down almost 80% in a year. Yeah. So they were punished pretty severely. And they got the message. And towards the end of last year, every single one of them went out and they cut costs. They cut workforce.
True. You look at Netflix and Facebook, they were the ones that got hurt the most. NVIDIA, Netflix, Facebook, really, Apple did not make as many mistakes. And so what's interesting is the NVIDIA, Facebook, Meta, and Netflix are going to come out way smarter, right? Because they survived like a major drawdowns into 2022 and really, got smarter for sure. Facebook, Zuckerberg definitely got smarter from the trauma. And he's not going to make the same mistakes again. And then Netflix is obviously, they're benefiting just because of the competence of their competitors. But now, let's be honest, I'd kind of been out of Netflix, but this is the one I'm really looking at. The strike's over. They come out of this with a lot of pricing power. It's not a cheap stock, which is the problem. But, it's a 2017 prices. I mean, if we go back, can we look at a monthly?
Yeah.
Oh, it's not. So where is this? 2017 prices. And if we look at the financial, if we go back and look at the forecast, on the left. So in 2017, they were making $1.25. So, 15 times, improvement in earnings in the same stock price. That doesn't mean it's going higher, as we saw with Baba. But like Netflix has a lot of tailwinds now because the competition kind of got weaker. and they continue to globalize. So, Netflix is one of the more interesting ones to me. But I don't love the content, but I think they'll solve that very quickly now that everybody's off strike. A lot of pent up content. And with two wars, the amount of content and storytelling over the next 20 years is going to be insane.
Are you watching anything on Netflix right now?
No, I don't think there's anything great on Netflix. I've been watching, like I said, the strike has kind of caught up with these companies. It's just a lot of crap content that you've seen. But man, in the hopper, they're going to spend. Actors want to act, writers want to write. They've been writing, and now they can get back in business, right? So, look at what Roku's doing. So it's there's a lot of things lining up, and
yeah,
that's why you preserve capital to be in markets like this. And so from a swing trader perspective, you must see the same thing.
I mean, I see more and more setups that are working. All the earnings breakouts are really following through. Like, you have the.
And I'm long Palantir. I mean, it's so expensive, but I'm long Palantir.
DraftKings and Shopify. So we're not really talking about all the few mega caps. Like they're more smaller companies like mid cap, some small caps. They're starting to join the rally. They're following through. And obviously we're also seeing some of the more speculative names. They're still losing money, but even they're starting to bounce.
But it's losing money. Like if you're trading this, you're just a sucker, I think.
But if it's a short-term trade, it doesn't matter how. You can still make. I mean, obviously, we see the gene editing stocks are waking up. This company CRISPR.
That's just a risk-on trade, right? Like that's a good sign, just overall that people are going to speculate.
I mean, one of their gene editing treatments was just.
There must be news for that to go from all-time lows to.
Yeah, they had a treatment that was just approved in the UK, and the other gene editing stocks, they just kind of went up in sympathy, but they've been big dogs over the years. But
there's a lot of resistance there. So I'm saying
it's working.
If the market's good, focus on
saving lives, Howard. So it's I wouldn't be surprised if we see some of them really. I mean, this one seems doing better than the rest, but it's still far below all companies.
Yeah. And then what else was I going to say? So I showed you the manager, I think Uber.
I just want to take a quick look at Turkey because you mentioned Argentina and inflation, and so stocks seems to be doing well, during inflationary periods. Even look at Turkey; they also had hyperinflation in the past 10 years or so.
Yeah,
and I guess it's just.
My eyes are on Argentina just because it's just been a dog for so long, but the market's perking up, and then the new president. So.
What was the Argentina? So we have Arco, which is like the McDonald's of South America. It's an Argentinian stock breaking out. That's what.
That's very interesting. So what is the ticker there?
ARCO. That's basically the McDonald's.
That's super interesting, and it's profitable.
Yeah, and then they have the bank. GLB. No, what was the bank? I forgot.
Arco, that's super interesting.
Yeah, there was one of the banks.
But Vespa? Oh no, there's a Spanish bank. I wonder how the Spanish banks are doing. But again, interest rates, so I don't know inflation, but that's interesting. The McDonald's of Latin America operator.
Yeah. I mean, it's been a dog for so long, and now all of a sudden it's making new what was it?
It's a four-bagger from 2020.
7-year highs. And it's probably not that richly valued, like P of 13, profitable compared to the US McDonald's is P of 24. So it's like much cheaper than the US one, and it seems to be growing faster. So there might be some opportunities there, obviously.
Also, just wouldn't surprise me with QQQ to just go back into a base and suck everybody in with those.
Oh yeah, for sure. You need to see
just go sideways.
Don't chase those that are up several days. Just wait for a new base or a pullback. Even in a bull market, if you chase them, you're going to lose money.
I agree. And that's why I say you saw that QQQ inflow. Everybody's just getting confident, just dumps it into QQQ, and you had record inflow. Whenever so you go from record, you go from huge bearish sentiments to record QQQ inflow. That's sloppy investing. That's people going from.
Yeah.
So you gotta really be careful, and that's why I'm
I mean, the biggest threat,
even within the
Howard.
mega caps, you can find some dislocation, right? Like with Facebook last year, and now it seems like Google underperforming. But I don't think Google stays underperforming for a while. But again,
Yeah.
the good news is we're not in a bear market. That's a good sign.
No. Well, in
And the
terms
good
of,
news is, guys, swing traders like you are back looking for dips.
oh yeah, definitely. I mean, it's been so
Yeah.
much easier and just uh, more pleasant to trade in the past few weeks.
Correct. Like in the end, it's just more interesting when the markets are not going
And
down.
I'm not surprised with those huge shows and the huge inflows in the queues and in the market in general, because the single biggest risk for professional money managers is to underperform during an up here for the market. Like no one's gonna
Yeah,
tell
they're way
you
lagging.
anything
Everybody's
if you
lagging this.
lose, 10, 15% when the market is down 20%. But if you're barely up when the market is up 40, you're done basically. That's why you see that chasing.
It's why I hated my job. Like you couldn't. The ETFs in the market cap lane is just too. And I'm saying, like, even if I was running a hedge fund today, I would be QQQ with the subtle differences, right? So that I don't have one of these down 10 versus up 40 years, right? It's everybody's kind of become an indexer, whether they want to say so or not,
Mhm.
because you just can't afford to have a down 10 versus an up 40 year. And I'm underinvested, as I've said all year, because of just my age and stuff. But still 10 to 20% up, like it's fine. But if I was a professional money manager, like managing other people's, this would be one of the most harrowing years ever.
Yeah,
Just
definitely.
because, yeah, just because it's just been wild. And underneath it all, Apple and Google and Microsoft carried it. So it's this year's a good lesson about why indexing has worked. And I think it's also a really good lesson, as I said before, is how tough it is. Forgetting how overvalued these bank stocks maybe it was how tough it is. You got China, you've got Ukraine, and you've got the Middle East, and these companies are not missing a beat um, because they have their products in your brain. Like they have their products just as part of your life, and you know, um, so it's very hard to unhook them.
Oh, it's good to have alternatives, Howard. Now that if like you as a wealthy person, if you don't have enough faith in the US dollar because it's kind of run by the US government, no, you would like to diversify, and maybe
Well, you can now. You can own Bitcoin. It's had its best year of everybody.
that's why you can own some crypto, or you can own Apple shares
Yeah.
as a form of currency. All right, let's call it a day, I'd say.
All right, everybody. We'll talk to you. Have a great weekend.
All right, you too, Howard. Bye.